So we were down 7% for the year. Now we're down 6%. We're working our way back. If we have many more days like this, we'll get back even and then gain some after that. Let's break down today's market action. We have Sandy Lincoln, BMO Global Asset Management Chief Market Strategist. He's got two ways for investors to play the market. Robert Luna, SureVest Wealth Management CEO, who is bullish on, get this, emerging markets. That's right. Well, buy low, right? He will tell you the best ways to play EM. And Larry Shover down in the pits of the CME. Larry, I want to start with you. Question is this a buyable rally or is this just a blip?
Who knows, David, right now? I mean, stocks down, stocks
you know. That's why we hire you.
I think I know. Nobody knows a thing right now, offering the fact that, hey, we had some great emerging market stability today. Economic data was very soothing. Earnings that came out were fairly decent today. But the best thing was retail. I mean, the retail stocks have been a complete washout all year long and saw a really nice rally in the retail sector. So this is definitely probably a buyable rally. But nobody seems to know. It's run by confusion, position, and technicals right now.
I don't know. Sandy Lincoln doesn't look confused. Sandy, come on into this conversation. You're a salty old market dog when it comes to watching the action. Tell us what you see and what you're advising your clients to do right now.
Well, Liz, it's a really interesting point that you just led with. I mean, people got all concerned, and it was understandable, right? We got weaker numbers out of China on manufacturing. Then you connect the dots to Argentina and Turkey and South Africa.
Yeah, but people who turned tail, Sandy, 2 or 3 days ago, just missed a big move to the upside here.
That's exactly right. And so on Monday, as you point out, Monday of this week, as recently as that, we sort of connected another dot, which was weaker manufacturing number in the U.S., and people got all panicked about it. But the trend is still, we think, more friend than foe. For example, the Fed tapered in spite of what looked like weaker economic news out of the emerging markets. Consumer spending has been decent. Corporate profits have been beating estimates. Lending activity is up. I think it's better to look at the trend and the more persistent, sustainable data than some of these distractions that have given us this. And by the way, people were yelling for a 5 to 10% correction for the last 24 months.
Yes.
All right. Well, there's been no bigger correction than in emerging markets. And Robert, I love your chutzpah to go into emerging markets with guns blasting. You say too many people are throwing the baby out with the bathwater, and the baby, you say, is Mexico. Mexico within the emerging markets is one that stands out, and you should pick that one in particular. Why?
Yeah, well, I like quite a few of the emerging markets right now. You know, the most profitable trades are often the most feared, and this is where you got to step up and buy them. Mexico's a very interesting story. There's a lot of structural reforms going on right now, and we think their GDP is going to go from between 2 to 3 up to 4 to 5 because of those reforms.
When you say structural reform, Robert, be specific. I know that they've opened up the oil industry to outside investments. What else have they been doing there?
That's exactly it. It's the same thing with telecom. You know, there's been some big monopolies that have been running commerce there in Mexico for quite a long time. So they're embracing free market capitalism, and we think that's going to lead to much bigger growth. And right now, all the economic numbers are being taken up from, like I said, 2 to 3% GDP to up to 4. Another thing to remember, their biggest trading partner, if you're bullish on the U.S., is the U.S. 75% of their trading is coming right here to the U.S. of A. So we like Mexico a lot. It's been a significant underperformer. Very rarely do you see it lag the U.S. as much as it did last year, so we're buying it right now.
Well, okay, so let's look right in front of our noses, Larry Shover. We've got the jobs number tomorrow coming in for the month of January. We got a good first-time jobless claims number today that looked much better. But hold on one second. We're going to go to Adam Shapiro. He's got LinkedIn numbers. Adam.
And they're going to like this on the street, Liz. Earnings per share, 39 cents a beat. They were expecting 38 cents, but look at the revenue number, $447.2 million. Street was expecting $437.88 million. We're going to dive into this, look at their membership numbers and premium subscriptions, and get back to you.
So the numbers sound good.
In fact, we have 227 million members, but we want to confirm that. That would be down from the last quarter.
That
Need
may
to confirm
be
that.
And that's exactly what bothered investors about Twitter, too, as you see the numbers look good, but look at the raw numbers, the dollar numbers look good, but the membership numbers are a problem. And that seems to be, Liz, what is sending this stock going down after hours. It closed at 223. The bid now is under $200. We'll see if it stays there as we go through all the details. Adam, you've been looking through some more. Give us some numbers.
It's 277 is the membership number. That's important because the last quarter they had 259 million members.
Right.
So they continue to grow the membership base. And remember, they don't make as much from advertising.
Not by the amounts that they wanted. That's why that figure is down a little. They were up, last time they reported, they were up 38% year over year. This time it's a much smaller increase, Adam. I think that might be what's spooking investors.
It could very well be. I'm trying to pull up. Charlie, do we have what LinkedIn is doing right now after market?
Yeah, it is moving lower. Yeah,
it's
the bid is 197, and
we're
the
down
close
11%
was
on LinkedIn.
Okay, let me just quickly say that they're giving guidance for the full year 2014 revenue at $2.02 billion to $2.05 billion. Right now, as you see the stock coming well off its close of the day of $223, they're acquiring a company called Bright for about $120 million. They say it's expected to be accretive, I believe. We'll check on that in just a minute. But they're talking a lot about that acquisition. Doesn't seem that people are excited at the moment about that acquisition of Bright, David.
Yeah, and Larry Shover, this again is something that we saw with Twitter. The raw numbers can look good, but people's expectations of growth of members is so high right now that unless you have that figure going strong, you get what you see with LinkedIn right now, which is after hours a drop in stock value.
Exactly right. And, you know, long term, it's a really good play. I don't think most people realize the large investments they've made in people and technology, and that's going to weigh on the stock as we're seeing right now. They are in a largely competitive landscape. They need to figure out, navigate how to monetize mobile, because we do know that page views are down. Desk usage is also down. So that's the key for a company like LinkedIn.
What, Larry,
but they've done
Adam has something more on the revenue for Q1, the current quarter.
The first Q guidance, 455 to 460 million. The midpoint, 457.5 million. The Thompson estimate was for 470, Liz.
So they've lowered the Q1 guidance. That's got to be it as far as the cloud over the stock right now.
Okay. Well, Robert Luna, you say it's all about earnings, and what we have seen in earnings, it differs from quarter to quarter. What we see in this particular earnings season is that the numbers, the dollar numbers, don't impress as much on social media stocks as the membership numbers do, right?
Yeah, that's exactly it. You know, people are not buying social media stocks, Dave, right now because they're cheap, right? I mean, the S&P 500 was up over 25% last year. People are looking for top-line growth. They're looking for companies that can break away from the index, and they're willing to give you, you know, a little bit of leeway if you can show some tremendous growth. But these stocks are priced for perfection right now, and unless you can come in and beat on all metrics right now, this is a market that's going to take you out to the woodshed, and that's what we're seeing.
Really stirring investors right now. If they don't get more eyeballs, and a lot more eyeballs, then they're not that interested, Robert.
Well, that's it, because it's all based off of future growth. But one thing I'd mention with LinkedIn, they're about to make a big push into China. And I think to sell this stock right here might be a little bit premature. Also, if you look at the revenue per user number, that's been coming up. So I'd be interested to see what that number is. Like you said, though, Dave, I mean, the top line, bottom line numbers look good, but it must be this first quarter that they're guiding a little bit weak on that's got the stock down after hours.
A guy like Sandy is picking names that look nothing like the LinkedIns or the Twitters of the world. It's just not your interest. You know, the cult stocks. Look what happened. One iffy number from Twitter, where they actually came in with a good earnings report, dropped that stock 24% by the time all was said and done today. But you like names like Bruker. You also like William Lyon and is Vince. That's such a cool company. I love Vince.
Yeah, we do. I mean, you're right. It's a far cry from the social media world for sure.
Indeed.
But I mean, let's just take one of those names for example. Take a company like Bruker. This is a company that's big into scientific instrumentation. They make everything from spectrometers to molecular diagnostics and everything in between as well, CAT scans, MRIs, et cetera, sell to hospitals, universities around the world, to governments around the world. A good margin play story, a stock that's selling in the I don't know, maybe the low 20s right now. A really improving margin story, we think, a really good entry point for investors, people that have that 12 to 24 month kind of time horizon. William Lyon's Homes, a really good story on the real estate side. They got really attractive land in California, in Nevada, in Arizona. Colorado. They build entry-level community homes. They got a lot of investor demand. It's an under-the-radar housing stock, maybe selling at 14 or 15 times earnings. These two stocks are both names that we hold in our BMO funds, and they just really are sort of good, solid performers. And in this market, you really want companies that can deliver and where you're not really sensitized to something as sensitive as you can be in the social media world.
And Sandy, these stocks that you've recommended really reflect the economy in general. And the question when you look at a 7% drop in the stock market, well, it's 6% today because of the gain. You really have to ask yourself whether this is, as you put it, a turning point or a tantrum going on in the market right now, correct?
Well, I think that's right. And I think there's more evidence that it's a tantrum than a turning point. And we talked about that at the onset of the show. Basically, the evidence is accumulating. The consumer's still solid. Corporate performance is still solid. The Fed still sees the economy as solid. So I think we see some things that are bending. Certainly, emerging markets are bending. I don't think they're breaking. So from our perspective, as an investor, you really want to look for companies that deliver the goods. That's top-line growth, that's margin protection, and don't pay an extraordinarily high PE for a growth story that's not going to deliver. And those are pretty simple guidelines, but important disciplines, I think.
Well, maybe News Corporation comes under that umbrella. They just beat on both earnings and revenue.
Good stuff.
Excellent.
All right. Sandy Lincoln, Robert Luna, thank you very much. Larry Shover, we're going to be back with you when the S&P futures close in just a moment. Thanks.
Thanks, guys.